All right. Good morning, my friends. Welcome to the Money and Jesus Show. Happy to have you. Welcome anybody joining for the first time. So this is a X space that we are now going to start recording for purposes of putting it on YouTube, maybe Spotify, some other podcast platforms. So hopefully it goes well. Hopefully everybody can hear what we're saying. This is a trial run, so if it sounds horrible, I apologize, but I think it'll be all right. I'm excited. Shout out to everybody that's been reaching out. We've been getting a lot of feedback, and people. I think there's more people that are interested in investing than I had thought originally, and it's very encouraging. There's actually a lot of, I would say, young people who wanna take actions in their own hands, and so that's why we're here. Not particularly for young people, but I think that we have more of a focus towards those earlier off in their journey. We do offer advice to older people, but generally we like to receive advice from elderly, or I shouldn't say elderly, more seasoned investors, I should say. But nonetheless, sometimes they enjoy listening to us too. So I'm going to dive in with a word of prayer here. So Father God, we praise you for this great day. We thank you for this morning. I thank you for Naphtali and his willingness to join every week. I pray that you would speak through us, that it would just be a good time of learning for everybody involved, that there would just be new things taken away, and I pray that you would continue to expand this space to whoever needs to hear. And I also pray for anybody that doesn't know you personally, that there would just be a supernatural encounter in their life, that they would see and know that you are the true Savior of the universe, and that you love and care about each of us deeply, God. So yeah, we just praise you for this opportunity. And amen. So, Naphtali, happy to have you here. Invited you to be co-hosts. Let me go ahead and cancel and maybe re-invite. So, wait for that to pop through. Hope you are doing well, my man. It has been I would say, thrilling week so far, even though the markets are generally down quite a bit. There's just been a lot going on. There's a lot of stuff happening. It's hard to keep up with everything, which is obviously why we do this show. But I kind of want to start off this particular show with a concept that I've been thinking a lot about recently. And I actually heard Michael Saylor talk about it earlier this week. And if you don't know who Michael Saylor is, he is, I would say, one of, if not the most popular person in the Bitcoin space. He is very proactive, and I would say that he is absolutely all in every possible way. He actually, he has a really interesting story. He was he became a billionaire in the tech bubble. And so he ended up, like, they had headliners of him on the newspaper articles back then, saying how he was a $1 billion loser, how he lost billions overnight in one of his tech startups. And the crazy thing is that he just kept grinding, low key. And basically, after working as hard as he could for those 15, 20 years, and his company was basically staying even, like it was, they were producing cash, they were cash flowing and they were making money, but they just weren't growing. And so he kind of came to this conclusion that, the way the current monetary system is set up, a lot of companies basically are set up to die. They're dead weight. And so he realized his company was dead weight, wasn't necessarily losing money, but it just wasn't growing, and they couldn't grow, and they tried as hard as they could to grow, but they were just pretty limited in what they were able to do. And so he came to this stunning conclusion that, okay, I need to do something different for the sake of this company. And so he spent, I'd say, years researching, okay, what can I do? Can I use this, I think at the time they had $500 million in cash, and it was right around COVID when the government started printing all this money. And so he basically said, okay, we need to do something with this cash, because if we do nothing, it's just going to lose its value really quick. And so, long and behold, he came across Bitcoin, studied it relentlessly, and he came to the conclusion that Bitcoin is the best store of value and it's the future. And so he basically made an announcement and said, okay, like, we're literally going to put this money into Bitcoin, but hey, if you guys would prefer to just take the cash out and leave, we'll basically let you do that. The shareholders were happy. He ended up being, I think, the first public company to basically buy Bitcoin and put it on the balance sheet. And if you look at the company today, they were like the best performing company, I think, all of last year. I can't tell you what percentage the stock is up. I want to say it's in the 10,000% range. It's actually outperformed Bitcoin over the time period. And so at the time, his company was worth about $500 million. I think today it's worth, I can't even remember the numbers. It's probably worth, I would say, north of $20 billion. You could look it up. Maybe even much higher than that. It might be in the $100 billion range there. So, but nonetheless, this guy, Michael Saylor, he went on he was at a conference, I guess, this week, and he basically was saying, you look at these super wealthy people in Silicon Valley who are just, they're swimming in, tens of millions of dollars. And you think, man, how do these people, like, how do they have so much money? And the simple reality to that is they're not, most of those people actually aren't any smarter than you, and they don't work any harder than you. They just understand a concept called leverage. And so I think leverage is one of the most important things that you need to learn for various reasons. I think in investing, it's an absolute must, but also in your personal life, in your career especially. I think if you don't understand leverage, you're going to undervalue and undersell yourself every time. So let me share a quick example for you. My wife knows this person who used to come into the coffee shop and chat with her, and his wife worked for this bank basically, and was very busy. And then the bank decided that they were going to get rid of like a president or a vice president or something, and they decided to basically dissolve this role and split it between this man's wife and this other person. And they gave this lady like a 3% raise at the end of the year. So this lady has been working relentlessly, working overtime, working at home, like basically just doing all this stuff, and never really got a real raise for taking on an obnoxiously more amount of work. And so at the end of the day, there's a lot of people like this who just work excessively hard and they don't understand their value. And I'd say more importantly, they don't understand the value that they bring to the company. And so today in corporate America, most places it's a goal for the corporation to pay you as little as possible, but to get you to do as much as you can. I actually just saw another example of this on X. A guy said that his wife literally just quit her job. She was in HR to be a stay-at-home mom, which is great. And then, like, literally as she was quitting, the company, I think she was making $26 an hour. The company made her a counter offer to stay, and they offered her $50 an hour. So what that actually tells you is that this lady was extremely good at what she did. She was getting underpaid for what she was doing, and she's extremely valuable to the company. And if you understand those things about yourself, if you're working for a company and you say, if you're confident that you provide more value to the company than what they pay you, you have what you call leverage. And you can use that leverage to either basically go to whoever's over you and say, okay, like I do all this work. I'm really valuable. I think I should make more or get more flexibility. Or if they don't do that, then you're able to probably find a new job and, get significantly more money than what you're making there, and the company loses out. And a lot of times you'll hear stories of when people try and leave companies, then they get offered a raise. That's just the reality. And so people in that situation, they were providing more value for the company than they realized and what they were getting paid. So if you understand this concept of leverage, you can use it to your advantage relentlessly in your own career. And so that's something I'd encourage you to evaluate. Evaluate what you do at your job. Are you adding more value than what you believe you're worth and what they're paying you? If the answer to that question is no, if you think that they're paying you fair, that's a good thing, I guess you could say. but you should also work at changing that so that you can gain leverage over the place that you work, so that in the future you have more negotiating power, leverage for getting a raise or getting a promotion, so to speak. So, but how this relates to financing and financial stuff, which is what we normally talk about. So I'll share my personal story with you. I've used leverage to really help myself out in a variety of ways, and I'm not trying to, I'm not trying to brag in any way. It's more of I want this to be a testimony of what the Lord's done in my life, because I've been relentlessly blessed over the past handful of years, and I will say it breaks my heart to see a lot of my friends who are basically still at the bottom, working, I'd say probably maybe harder than me, working multiple jobs, and just don't seem to be making any traction in life. But I would say over the course of the last 5 years, I would say my average salary was in the ballpark of 40 grand a year, which isn't great. I mean, it's not horrible, but it's quite below the national average for sure. But in those 5 years, I've been able to basically go from having a net worth of probably, I'd say around 10 to 15 grand. So basically my car and some crypto I invested in early on. To today, me and my wife are probably, I would say for our age group, either in the top 1 or 2% of wealth in this country for our age group. And I'm 26 if you don't know that. So in the course of, I'd say 5 years, making, like I said, an average of $40,000 a year, we've basically, I would say honestly, gained more wealth or net worth than what we even were paid in those 5 years time frame, which most people can't wrap their head around. But once you really, like I said, once you understand leverage, your whole life changes. And so, how we were able to do this, I literally, my first job, I was making $13 an hour. And this was literally basically right as COVID was happening. The housing market basically was stalled. Interest rates were crazy low. And I was just ready to buy a house, and I had some handyman skills. So I found a house I liked. I thought the price was great. Offered a lower price. They accepted it. And I looked at the house and I said, man, this place needs some work, but it's got a lot of potential. For example, location was great, had about an acre of land, had a ton of square footage, big rooms, so I loved it, 2.5 garages. So purchased the house, took a big risk. I would say nobody actually supported me in this purchase. They all thought I was crazy, but I had peace from the Lord, and I did it. And somehow the bank literally gave me a loan to purchase this house. And they actually, what's crazy, they not only gave me a loan, they let me borrow 103%. So I maxed out as much debt possible to buy this house. I literally bought a house with like $3,000 cash down, including closing costs and stuff. Purchased this house and got to work. I mean, we basically flipped it. I had a lot of help, which I'm very grateful for. But long story short, the value of the house is now, I would say, about tripled from what I paid for it. And I would say of that, of the appreciation minus the investment, I'd say, it's about 200% return on investment there. So, and the crazy thing is like I said, going back to leverage, I was able to take a loan from the bank, which is basically, it wasn't even my money. Like I couldn't have afforded the house, but the bank gave me a loan at a super cheap rate at the time, 3.5% or whatever. And I was able to purchase this house, and you put the work into the house, you remodel it, and then the value literally, it grew by quite a bit. And that's just, this is concept of leverage, right? If you're only using, if I was only using my $10,000 I had to my name, the reality is I couldn't afford to buy any house or any land. And so if you basically try and save up to buy a house from that time, making the money I could have, even if I would have been able to save half of what I made, I'd still be sitting without a house, and I'd probably have, a handful of money saved up. But going back to that concept of leverage, right? So you used other people's money to purchase an asset to grow the value. Okay, so now the value of the house was grown. So at the time, I was trying to pay the house off because I thought that was the best strategy. And then I heard some alternative advice. People were saying inflation's at 8%. Anybody trying to pay off their house right now is crazy because you could borrow money for 3% still. Inflation's 8%. They're giving away free money. You should take it and invest and buy something, buy an asset that's going to go up in value. So, after a lot of thinking and praying, I decided that that was the best move. And it was literally right between job transitions, so I didn't really have proof of income. But, praise God, they ended up giving me a loan anyway. And so I pulled a lot of equity out of my house, which I thought was crazy. But, I also took a risk and I dove in. And so I sat on that money. I had it in, I think Robinhood, it was earning 4 or 5% interest, doing nothing, which was literally more than the loan I took out. The interest rate on the loan was 3%. Robinhood was paying me 5%. I was still making money off of loan money, which is like a crazy system hack. But lo and behold, I just waited and waited. I tried to buy a rental property, every single one. I put a couple offers through. They all fell through. And then I really felt like the Lord revealed Bitcoin to me and that I should study it more. I've known about it for probably 4 years at the time, but never was serious about it. And lo and behold, I studied it for maybe over 100 hours, and then finally it clicked. And I said, "Wow, this is crazy." The price was under 20,000, and so I just I felt the Lord say I need to start allocating that money into Bitcoin. And that's exactly what I did. I started literally purchasing, a large amount every single day. And I got halfway through my stash, and then I let fear kick in, and I actually missed out on what I would say is a great opportunity. So I could have went the rest of the way in and probably had my average cost in Bitcoin around $20,000. Instead, I pulled back. I was fearful. I waited, thinking it might go lower, but it didn't. It went higher. So I probably ended up getting the rest closer to 30,000. But looking back today, obviously that Bitcoin is worth way more than I purchased for it. It's up probably, 300 to 400%. And so, this long story short, what I'm trying to say is that literally I started with $3,000, figured out how to use leverage in what I would call a safe way. I didn't say I went out and I won 100x and purchased a stock and was hoping it'd go up. But I found what I considered a safe investment in assets, something that's going to appreciate in value, like a house. Purchased it with as much leverage as I could get at a low rate, and then I put in the work, I put in the effort, increased the value of the asset. Then I decided that my money could be better spent elsewhere than sitting in my house, and so I pulled out some extra money from that. Which, by the way, whenever you pull money out of a house, the bank won't let you take over 80%. And so that's kind of a comfortable cushion because it allows the housing market to drop by 20%, which it can definitely do that. But I would say the odds of you defaulting on a house payment if you have a job and, you still own a majority equity is pretty low. It's possible, but, it's still a risk. But nonetheless, I pulled that money out. AKA leverage, I wound up with a lot more money than I started with. And so I was able to purchase a lot of Bitcoin at a price that was very low considering where it's at today. And so, so all of that to say that, as I've been learning about leverage, I realize more and more that it's one of the most important tools that you can use and, study it, understand it, because there's definitely dangerous leverage and you don't want to go out there and you don't want to basically gamble your money because a lot of people do that. But figuring out how to use leverage in a safe way, it basically just increases the amount of money that you use, and it increases your returns. It kind of magnifies it. And so if you're smart, if you're confident about your investment, but you also have room to fall back on if it goes wrong, I think leverage is a very good key in life that we need to really understand for multiple reasons. But so that was kind of my story. That's how I got to where I am today. And so I kind of want to just shift over to Mr. Naphtali. What's your thoughts on leverage, man? You have any advice on how to use leverage? How would you recommend somebody starting out? Maybe they have $5,000, $10,000 to their name. What would you recommend? How would you recommend using leverage to that person, or have you used leverage in the past, and how has it worked out for you?
Well, for me, leverage could be. I mean, I think in today's economy, there's only three places of leverage you can use. One is the modern currency. So currency is changing from gold and paper into digital modernization of fin and finances and crypto. So whether you like it or not, whether you look at crypto as an investment or whether you look at it as currency, you need leverage in finance. So it's definitely shifting. And then the second is real estate. And real estate is everybody needs a roof over their head in America and the modern world and in the Western world. We need a roof over our head. We need electricity, running water. We live in a modern society. So where we live, we need leverage to either purchase a residential or a commercial property or a nonprofit organization for a nonprofit if you work with a nonprofit. And then I think the third place we probably need leverage is, I think, technology, social media, or I would say media just in general, because that's shifting. And technology and media, even though they're two different things, they're still part of the same system. So somebody can be building technology for a hospital, but I'll still put that in the category of media, social media, and technology under one umbrella, because it's shifting in that direction. And so, how would I suggest leverage? If you had 5 to 10,000, I would say take that money. First of all, I agree with Ryan. I think the first two places is crypto and real estate. Now, it depends where you live in real estate. If you're living in a prime location and you can use that as leverage to get a loan, I think that's the best thing. Get a house, rent it out, live with somebody. I would personally live with somebody. When I was young, I had my own house, but I lived with my parents. I've never lived at my own house. I probably spent 2 weeks in total at my house in 10 years of owning it. So I've learned that when I had my own house, I lived with my parents, and eventually I rented out my house, and that helped me at a certain point to pay some bills, and I actually paid off my house eventually. I actually paid off the whole loan of my house. By God's grace, I did that, and then it became an opportunity. So I think this is something that we have to use in wisdom, is how we use leverage. Go buy a house and rent it out. Or if you can afford, somehow you can use $5,000 to $10,000 to get $300,000, and right away maybe get a duplex and rent out half of it, live in half. That's my first way to use leverage. Second is, if you're going to go into any business, it's a risk. Any business, whether it's the food business, whether it's the tech business, but you need social media to promote that business. We live in the best time in history where you can sell products in Africa, in India, in China. Because of the internet, you have a cell phone, which is more powerful than any computer in the last 70 years of technology, of computing, or modern computing, I would say. So, if you want to spend that $5,000 to $10,000 as leverage for investment in the business, use wisdom. And so that's even gambling itself, because you need a computer, a camera. I would suggest getting a knowledge of social media. So the third part would, of course, be crypto. I think crypto, for some, is the gamble. For some, it's not a gamble because they understand it so well. Me personally, I go to Riot and I go to people that are more knowledgeable about it. And so I know that's going to be the future of currency. In 10, 15, 20 years, crypto is going to be the future of currency. So some people are looking at it as an investment. Ryan looks at it as both. He looks at it as modern currency and as finance. So the new guys on Wall Street no longer have an office on a 100-story high-rise. The new people who are running Wall Street look like a guy sitting on a farm next to a barn in the middle of nowhere, looking at his kids run outside while he's on his computer typing. And so it's a very different world where a guy was 12 to 16 hours a day hustling, calling people, trying to make deals, trying to get investors. Finance is shifted. People are already buying houses with crypto. Countries in South Africa, not countries, cities in South Africa, actually, there's full cryptocurrency cities in South Africa. Rwanda, in Rwanda's a country in Africa. Some European countries, Dubai, people go and buy cars with Bitcoin. This one guy bought like a $500,000 car. He walked into the dealership and he said, "Hey, can I pay with crypto?" The guy was like, "Sure, go ahead." He didn't even try to sell him the car. He went to the guy sitting down, and the Arab guy he went to the Arab guy, said, "Hi, how you doing? Can I buy a car?" And the guy's like, "Sure." He said, "Can I pay with it right now, cash and crypto?" And so that's the new way people are using currency. So how do you get leverage? And I think that's the second question. So my question to you, Ryan, is you said if I had 5 or 10,000, I said real estate. First of all. Second would be technology. Third would be crypto. My question to you, Ryan, is you don't have 5 to 10,000. What could you leverage to get leverage?
Man, good input. Thanks for that, man. Good wisdom there. That's a great question, man. You don't have the money for leverage. There's multiple ways you could do it. I honestly, the route I would take is I would figure out how to get some money. So if that means picking up a side hustle, a side job, I think it's always good to figure out how to basically get some money left over once you pay your bills, whatever that looks like. Because it's very difficult if you're living paycheck to paycheck. Your life's probably only going to get more difficult because the cost of everything's only going to increase. It's never going to get cheaper, I would say, generally. That's just how inflation works. So that would be the first way. Figure out how to cut stuff out of your budget or get a second job. Or like you said, if you're renting, I guess you don't have the option. But the second option would be to, basically figure out a skill set that you have that you could basically leverage to get some money. And so whatever that looks like, I don't know, maybe you're really talented with cooking and maybe, try to exploit that talent to basically get some money. Because it's honestly really hard, I would say, to find leverage if you don't have anything, if you don't have any collateral, especially. You could try and get a loan from somebody, like somebody that a friend, but I honestly would not recommend that unless you're super confident that there's a obvious opportunity. And I mean, I guess at that point, if you're able to sell it to that person, that's great. But typically, I think that the best thing that you could do is trying to get something under your belt. It doesn't even have to be much. You can start investing today with as little as like a couple dollars, honestly, which doesn't sound like anything, but it's crazy how far it could go. I actually have made stupid money on something like Dogecoin, which I wasn't even intentionally trying to make money. It just so happened that I put like $40 into this coin way early, forgot about it, and then once it ripped, I logged back into my Robinhood account, and I was like, holy smokes, this is insane. It grew to like over 10 grand, So, that the crazy thing is that there's opportunities to 100x or multiple 100x your investment. So you don't need a lot of money, and I'm sure that if you're a Christian and you sought the Lord and said, God, where can I 100x what I have? I have $100. How do I 100x that? I'd be pretty confident that He would probably lead you to some stuff or lead you to some stuff to study. And that's kind of how I found a lot of my investing. I feel like it's literally just random. It's not that it basically pops up on my X feed or somebody talks about it and I think about it in the open. So, there's opportunities out there. And so, if you could save, $100, make that a goal and then invest it, and maybe you can start finding some good investments, grow that $100 to 200 and then just watch it keep on doubling while continuing to put more money in the thing. So that would probably be my best bet. And like I said, I do think real estate for a lot of people is a good way to start just because generally that market does go up. I think the average appreciation of houses has been around 7%. And, you know, that's just because inflation typically is real inflation. The amount of money they produce every year on average is about 7%. So, that was, yeah, so good question there, Naf. I'm going to go ahead and looks like somehow it kicked you off a co host, so I'm going to invite you to co host again. I want to give a shout out to Marianne who popped in today. We're happy to have you here. I'm going to invite you up to speak if you want. We are open to any questions, so this is an offer. If you want to ask a question, we'd be happy to have you up. If not, don't feel like you're pressured to or anything. But yeah, I'm going to go ahead and kind of start to rotate a little bit into GameStop. So I think the GameStop everybody knows about, this crazy story that happened back around COVID, is a story that people should actually take the time to study because it entirely contradicts everything that we're traditionally taught about investing, especially from the Christian community. I feel like in general, which is really weird. Um, if you ask a lot of people about what happened here, they would say it's just stupid, it's dumb. There's actually a book about it, a movie called Dumb Money, and I started listening to the book. I never actually listened to it. I watched the movie. Not sure I could recommend the movie just because it's extremely vulgar. But if you want to get a quick rehash of what happened there, I guess you could watch it, but be warned, it's very vulgar. But the story is phenomenal. I'd say it's one of the greatest American stories of our time, without a doubt. And so, long story short, what happened? There was this guy living in Detroit, which is a rundown city, and he has a wife and he has a young kid, and he's passionate about investing, and so he's looking for opportunities and comes across the stock called GameStop, finds out that there's a bunch of short activity. In other words, like a bunch of hedge funds are betting against it. And to make a long story short, corporate America is known for actually intentionally bankrupting companies because there's money to be made in bankruptcy. You can acquire the assets for a cheaper rate, and there's just a lot of legal fees and stuff that gets happened. So that's a really deep dive, but long story short, that's what Wall Street was doing. They were trying to bankrupt GameStop. They figured they're as good as dead. And so this guy, I think his name's Keith Gill or Keith something. His name's Keith. Literally starts this YouTube page called Roaring Kitty. And it's funny, but, he did all this homework and he came to the conclusion that, okay, there's new video game consoles coming out. GameStop has a chance to come back. Thought they had a good balance sheet, and so he started just posting videos and comp posts and said, hey, look, this stock is heavily shorted. I think we should all band together and buy it because there's potential here. And so he did. He put his money where his mouth was, and he literally went all in. Like his wife was on board, which I think is amazing. And they bet their life savings, $53,000. They threw it on GameStop, which is I would say everybody in the Christian community probably would have called him the equivalent, a fool basically. They probably would have said that's way too risky. You're out of your mind. What are you doing? But lo and behold, what this guy ends up triggering is an entire revolution against Wall Street. And so, like you were saying, Naphtali, since everything's changed, since you can now buy stocks from home, you don't have to call Wall Street, you don't have to go to New York City. All these average, normal people and investors saw this post, and they're like, they basically kind of understood what Wall Street's been doing, how they've been robbing from the average person to enrich themselves, bankrupting companies. So these people are all just like, we're just over it. We're buying some GameStop. So everybody started throwing money in. And lo and behold, the price started going up and up and up. And, as it went up more, the army of average people grew. And, one of my favorite stories from the movie was this girl who was in college and found out about it. A friend told her basically that, hey, Wall Street was trying to bankrupt this company, GameStop, and there's a bunch of people buying it to revolt. And she's like, man, that hits me because my dad literally worked, his whole life at this company, and that Wall Street bought out and ended up bankrupting. And in the process of bankruptcy, basically took his pension away, so he lost everything. So she had this like bitter taste towards Wall Street doing this, and she's like, I'm throwing everything in here. So she threw her life savings. I think it was around like 10 grand. And she was, which I think is amazing, by the way. Whenever you stand up for what you believe and you put your money behind it, I think that is absolutely admirable, especially something high risk. It's one thing to do it for a gamble to try and make money. I don't support that. But when you go all into something because you passionately believe in the purpose behind it, to me, that's incredible. And so this girl puts all this money on GameStop, and I think her net worth grew. It grew to over six figures doing this, which I think is an incredible comeback story. But lo and behold, what ended up happening, there is this hedge fund. There is this guy who ran it, incredibly smart, made tons of money. I think his average return was like 30%. And he saw the price of GameStop going up. Got prideful, and he's like, "This is stupid. These people don't know what they're talking about." So he put a big short bet against it. And if you don't understand what a short is, basically you're making a bet that the stock's going to go down, and you can make more money that way. But the crazy thing is if the stock keeps going up, there's no cap on how much money you could lose. It's actually exponential or infinity. And so this guy who was managing, I can't remember how many, it was tens of billions of dollars, super successful guy. He super rich, made this one bet, and it backfired so bad that it literally bankrupted his entire hedge fund. And so LeBron James was actually a big holder, or he had a bunch of money with this guy. LeBron James ended up, he lost $500 million in this entire shakeup here. And I think he ended up having to share a part of the team he owned or something because the losses were so significant. But long story short, the guy who started this revolution, like I said, Roaring Kitty, he turned his $53,000 in life savings, which, by the way, like I said, everybody thought he was ridiculous and foolish. Turned that into $47 million. So you want to talk about taking a risk and being successful? I think that's the greatest story because he wasn't just gambling his money. He dug in deep, found an opportunity. And he went all in because he believed it, and he wound up obviously very successful. Not only that way, but he also sent a message to Wall Street that the times are changing and that the power is getting redistributed back to the average person. And so a lot of normal people basically made a lot of money because they stood up for what they believe. And so you fast forward to today, that was multiple years ago. And GameStop's kind of back in the news. The company has turned itself around remarkably. Their last earnings call, which was I think a week ago, was a home run smash hit. They made a ton of money. They're sitting on a ton of cash. It's actually a really strong company. And they announced that they're going to start buying Bitcoin. I think their first plans to buy $1.2 billion. So it's pretty fascinating what's happening here. The price actually yesterday or 2 days ago, after they announced this purchase, the price went down exponentially, like 30%. It went up like a lot, and then it dropped back down. But what you need to know is there's a lot of insider stuff going on. There's a lot of what you call dark trades, which is basically trading offline. And so I noticed that the amount of people buying shares on this dark, what you call the dark trader, is through the roof. I mean, there's people buying hundreds of millions of dollars worth of shares. And, to me, that's an indication that the stock was being manipulated. The price dropped, I think, to scare a lot of average people out. But I can tell you that I strongly think that, wealthy people and insiders and people that know what's about to happen are buying. They're betting big on GameStop. And I think it represents more than just a good stock or investment. I think it actually represents a resistance or a revolution to the current financial system, which, like I said, long story short, extracts money from the average working person and sends it upwards to fill the pockets of the wealthy. There's actually a report that came out this week that said the average bonus on Wall Street increased by 33%, and that average payout was, I think, over $250,000 per person. So you think of getting paid that much money as a bonus, it increased so much this year. While us average people might get a 2 or 3% raise, they get a 33% increase to their bonus when they're already making multiples on multiples of what we make. And quite frankly, a lot of them, they're profiting off of our labor because we work for a corporation, and we make a lot of money because we work hard. We don't get paid the fruits of our labor. And so that money all gets sent up, basically to the stock, in which these people on Wall Street end up profiting. So, long story short, but once again, nothing on this show is financial advice. I forgot to make that disclaimer, but nonetheless, I have been buying some shares at GameStop. I own a little bit now. I think it has great potential. Somebody went on live TV. I can't remember which show, but he strongly believes that it's going to $60 to $100 in the very near term. And when you study MicroStrategy, their stock did a very similar thing whenever they first announced that they were selling basically convertible bonds to buy Bitcoin. The stock price dipped on the news, but then it turned around very rapidly and accelerated. So, you want to talk about leverage. I encourage everybody to spend some time studying GameStop, look into it on X, see what people are saying, and do your own homework. But me personally, I think it could be a great opportunity to find a couple multiple 100% gains on your money. So, obviously I have some shares. I bought some on this dip a couple days ago. And, yeah, so I'm not going to talk any longer, but we'll go to Naphtali, or if anybody in the audience has a question they'd like to ask, we'll kind of see if anybody has anything to add, and then we'll finish up talking about Bitcoin loans and why I think that's going to change a lot of things in the finance space.
Well, to comment on GameStop, that's a small comment. Is I haven't really indulged in it for years, but it's something I think I've always recognized. I think what GameStop has is also a cult following, and there's also a community behind GameStop. So I'm not saying certainty, and there's certainty behind GameStop, but I've always thought they would come up with a meme coin, have some type of crypto, because a lot of the gamers were the first ones to really, that community, that GameStop community, was some of the first ones to invest in Bitcoin and recognize that this world was going to change into that token kind of world and that NFT kind of world. I've watched stories of billionaire crypto gamers, guys who were gamers all their lives, who've done nothing but game. And even if they haven't made money from it, they were gamers and they invested in crypto when they were 12 and 13, and now they're billionaires almost, and they're buying NFT art and getting into that world. And so just researching the entrepreneurs in that world, and I think those guys were very watchful from the Wall Street world, who maybe have never played a video game, that recognize there's something with this. So I think that's something we should take. That's something we should really learn from. Is we might not like something. You might not like crypto. You might not like real estate. You might not like a certain thing or a certain skill set. Find somebody who does, or learn from somebody who knows more about that situation. And that's just my knowledge of that. So, yeah, Ryan, any questions or any thoughts of anybody wants to ask anything?
Cool. Yeah, appreciate the input, man. So yeah, once again, just ask if you've got any questions. Give you about give you a couple seconds to pop up and speak. If not, I think I see a comment here. Let me see. Oh, I'm still figuring out how to use X, so. Okay. So I guess we'll go ahead and move on here. So last thing I want to talk about, something I kind of mentioned before on the show, but I just want to emphasize that I strongly believe that this thing changes everything about finance, and it's Bitcoin loans. And Coinbase started offering Bitcoin loans, and I dug into it for the first time. Like I, basically said, okay, how can I take out a loan? How easy would it be? And I'm telling you guys, to me, this completely blows my mind. Like, let's say, for example, you have one Bitcoin on Coinbase, and price of Bitcoin, we'll call it $80,000. And let's just say you want to buy a new car. You want to spend 30 grand on a car, which I think is fair. You go to the banks, you get your rates, X, Y, Z. That's always been the traditional means. I mean, you could either sell your Bitcoin or whatever you have to have some cash. You could pay cash for the car, or you could take a loan out if you feel like the interest rate's a fair point. But something new that recently popped up in the crypto space, like I said, is being able to borrow against your Bitcoin. So in this example, if you have one Bitcoin worth $80,000, you can literally just go onto Coinbase and you could basically say, I need a loan for $30,000. And in minutes, you could have $30,000 in your name. No background check, no credit check. What's even crazier is there's no monthly payments required. And the interest rate was below 5%, which I couldn't believe. I assumed it would be closer to 10%, but man, 5% to borrow in today's environment is crazy. But here's why I think this changes everything, because I think it's actually the best way to borrow money if you're going to do it, and if you have if you own some Bitcoin, because how the process works is Coinbase is going to hold your Bitcoin as collateral, as much as you want to post. So let's say you have your Bitcoin, they're going to basically just lock it up. And so your Bitcoin's locked up. Now, how the loan works is as long as it's something called loan to value. As long as that stays below, I think it's 88%, you're in good shape. So in other words, let's say if, just to make it easy, if the price of Bitcoin was $100,000, you owned one Bitcoin. If your loan got to $88,000, after interest, or maybe the price of Bitcoin fell or something. Worst case scenario, what happens is Coinbase basically liquidates you, and they basically sell that Bitcoin that you have as collateral, or whatever percent they need. I think it ends up being about 90%. So they sell that and they pay your loan off. And that's it. Like, you don't default, you don't go into bad credit score. Like, it's basically you lose your collateral. And so as long as you understand that, like, I think this is probably this is the best way to borrow money, in my opinion, because it's essentially what I would call it's risk-free on default, meaning that like I said, worst case scenario, you're going to lose your collateral Bitcoin, which could be, in my opinion, would be bad. And so if you're smart about taking a loan, you probably don't have to worry too much about it. I mean, I personally wouldn't borrow because of this. I wouldn't borrow over 40%, because that basically puts a cushion around you so that the price of Bitcoin could fall by a little over half and you'd still be in good shape. But in my current situation, I'm looking to buy a foreclosed house, and as many people know, those are cash offers. And so for me, I have two options. I could either sell some crypto and pay capital gains tax on it, and then use that money to buy the house, or I could literally just take out a loan against my Bitcoin after I after I successfully win in an auction, and let's say I own a Bitcoin now and I buy a house for 25 grand. Like, I literally don't have to go try and find money or raise money. I could just go on Coinbase and say, okay, here's my loan. A couple minutes later, I have 25 grand transferred to my bank account. Takes a couple days, and then, like literally set. So here's how it gets really interesting, because if you study the rich and their playbook, they're big proponents of this. Only they use it with real estate, and so you know, in my opinion, if you're going to, um, if you're gonna use debt and you borrow against an asset, there is some risk, but I'd say the risk is on the lower side. And so if you borrow against your Bitcoin, let's say you borrow 25% of the value. I think it's very likely the price of Bitcoin long term goes up, and so the price of Bitcoin when you borrow is $100,000. Let's say in a year it goes up to 150 grand. If you borrowed $30,000, at the end of the day, you actually come out in the green, meaning that the appreciation of the asset of Bitcoin actually cancels out what you borrowed, and so at that point, you could sell some coin to pay off your loan, or you could keep stacking it, or whatever you want to do. But I'm just trying to say that, like, this concept to me is crazy because it makes perfect sense, but it's been so unaccessible to the average person, I would say. um, because for us, we need to have proof of income, we need to have a good credit score, we need to have XYZ. But through this, like, if you own some Bitcoin, like, you are instantly you're instantly approved to take out a loan for honestly as much as you want. Like I said, you have to be smart with how much you take out. But man, just to change the perspective here, let's say you own 10 Bitcoin, it's worth $800,000 today. And let's say you want to move to South Africa, and you say, well, I could live on 36 grand a year pretty comfortably. You could literally, move there. You could live a comfortable life, and you could literally just keep on borrowing against this Bitcoin, because, in the long term, the price will continue to appreciate. And so, you're going to keep all 10 Bitcoin. You're going to get full access and benefit to the appreciation of those 10 coins. And so, maybe in 2 years, the price of Bitcoin is, like I said, 150 grand. You still own 10, so now your net worth is $1.5 million. And if you live on 36 grand a year, you've borrowed $72,000 at 5-6% interest rate. You do the math, that's probably what, $85,000. And so what I'm trying to say is that, like, this opens up an opportunity for people basically to copy the rich's playbook, which is, whether you like it or not, a lot of rich people live on debt because um, it's more smart than selling an asset and paying capital gains tax, which is about 15%. So if you could borrow money against your Bitcoin at 5%, over the course of 3 years, paying that 5% interest, you're actually going to still end up paying less than you would if you sold it via taxes. And so if you believe that the price is going to continue to appreciate, especially over that 3-year period, to me, it honestly doesn't even make sense to sell it, because, I'm confident that the price will continue to go up as it has over the last, 10 years or whatever. And this is a controversial topic to many people, and I understand that, but I really think that we need to share this side of the story, because a lot of people who don't know it's an option, might not know it's a possibility. But I'm just pointing this out. Obviously, a lot of people in the Christian community are very opposed to debt, and that's okay. Like, I don't necessarily argue with people. I think that's fine if you stay away from debt, and generally, I think that's a good thing too. Because it is a very dangerous tool, and if you don't use it properly, it can really get you into trouble. But I do think that there are situations where, in my personally, I've used debt, and it's helped me out tremendously. And I believe that, or I have been able to bless the kingdom of God and other people because of that. So that's kind of what I'm looking at now. And like I said, I talked about leverage earlier. So now I'm in a position where, I own, two assets that continue to appreciate, our house and some Bitcoin. So um, the government's going to continue to print money, even though Trump is trying to cut spending, and he is. You look at the bill that they just passed; they're going to add, I think, $4 trillion in debt. And if you look at the global, what's called the M2 money supply, which is basically just a tracker of the amount of money being printed around the world, it is on the increase quite a bit. And there's actually an interesting chart you can look at which compares the price of Bitcoin to this increase in money supply. And it almost follows, I would say, to the T, with about a 10-week delay. And so we're currently right around that 10-week delay part, before the money supply has spiked back up. So I think it's quite possible, if it continues to follow this trend, that we're going to see some price appreciation in Bitcoin in the coming weeks. Something to keep your eyes on too. But obviously, I'm a long-term holder, so I don't try to day trade Bitcoin or anything like that. But the main takeaway from this is that a lot of people write off Bitcoin as too risky, XYZ. But whenever you start to really dive in and understand it, whenever you spend, I would say, 100 hours studying it, the doors it opens up, to me, is mind-boggling, because now I have instant access to basically cheap loans, and I have collateral to back it up. And so, worst case scenario, I get to keep the money I borrowed, but my Bitcoin gets liquidated, which would be unfortunate, but at the same time, that's part of the risk. And so now I'm able to move on to purchase my third asset, which is a foreclosed house. And so through doing that, I can find a good deal. I could add value to it. And I think, for example, Pittsburgh, which is the area we live, is the number 2 most profitable city in the country to flip houses. The average returns over 100%, which is crazy, which ends up being over 100 grand. So you know you think about it, if you make $20 an hour at your job, you're making about $40,000 a year, paying taxes. If you flip a house in Pittsburgh, you can make 2.5 years' salary, um, in probably 6 months. So stuff to think about. And once again, that's leverage. How do you use leverage? If you are skilled, and if you're a contractor and you're working for other people, you might make a good hourly wage. But the truth is your time is almost guaranteed better spent finding value homes, flipping them, selling them, because you're going to pay less in taxes, and because you're going to make a lot more money for your time per hour. It's less secure, it's taking a risk, but those skills are valuable. But yeah, that's kind of my last point here. I want to go to Naphtali, see what his thoughts are on that, if he has any advice, and then once again, we'll open it up to any questions. And if nothing there, we'll go ahead and close her up for the day.
So, what I would say is, I think the loan system of cryptocurrency, Bitcoin, is the standard right now, and the main Bitcoin. But I'm thinking that in 50 years, not 50 years, in 5 years, what would crypto loans look like? Right? So I think it's pretty much going to be the standard. That's what AI says. ChatGPT says that in about 5 years, it's going to most likely be the standard. Now, that's just a prediction. And I think you also have to be careful on how you invest and who is investing, because and what platforms, what websites, Coinbase, and getting the. I think it's going to be way more secure. I think it's going to there's actually going to be less scams. The thing about scams with Bitcoin is that as soon as one happens, it's advertised. And so there's a lot of scams with that. But at the same time, there's a lot of scams in the finance industry. So many people lost trillions of dollars. I would say even more than with crypto over the last 50, 60 years. The thing is, I think there's the blockchain. And I think the blockchain is going to help people understand crypto better. And they're going to use it for everything, social security, to selling music, to selling art. People are already using that. And that's something we're stepping into, what we want to step into, even with investment in music and stuff like that. And so my input on loans is that crypto, I think, will become the standard. I think there'll also be entrepreneurs, because a lot of the entrepreneurs who, again, I think this is my own philosophy, and I could be wrong, right? He's more knowledgeable about this, but a lot of the entrepreneurs I've read about, and he's read about, Robert Kiyosaki, the Grant Cardones, a lot of these billionaires, the thing about them is they own two things, right? Their currency is not tied up in US dollars or in gold. Their currency is tied up in real estate, anything from commercial to residential. Even if they deny residential, they own so much residential and so much commercial. And they also, at the same point, own crypto. And most likely, majority of the crypto they own is Bitcoin. Now, there are a couple other Bitcoins and even meme coins they own, but for the majority of it, it's crypto and so let's watch what the richest people in the world are doing. Let's pay attention to what they're doing. And even if they deny, some of these people are denying, like Warren Buffett. I think Warren Buffett's going to have two main places he's going to put his money in. That's real estate. He got $1 billion cash, and it's not tied up in crypto yet. I think what he's going to do is he's going to invest that in real estate, and eventually that will turn into crypto. So the trajectory of the future is really changing, and we need to use wisdom how to navigate to it. I'm not trying to be a word salad or try to confuse anybody, but that's like my articulation of it right now. What Ryan was saying, and I think leveraging is skill set. I think one of the things is learn from somebody who's very successful, even in the crypto industry or in the real estate industry. There's a man that both me and Ryan know, and I've been going to this man almost weekly and going to him and asking for his advice. He's a multimillionaire, and he's invested in crypto. He's an old man. He's probably in his 90s, but he took his advice from a younger guy who was 26 years old, who's Ryan. And that's how these billionaires and millionaires work. A billionaire might not be invested in crypto, but he has a young guy who's 21 invested in his crypto, and he has a 35-year-old invested in his technology company and his social media, and he has a 45-year-old maybe in this field, and he has so when you enter in the industry, realize that you might not have all the skills, but find the people that have the skills, either learn from them or invest in them. Either you're doing two transactions. You're either going to be taken, which is a very bad transaction, I would say. There's two things we need to do. It's either we need to serve the next generation or serve the younger generation, or we need them to invest in us. There's only two transactions. And I think the other transaction is just taken is going to result in a failure. So as the Christians, a lot of times we'll get upset and we'll say, aren't we supposed to love and just give and not care about investment back? Because if there's no investment back, there will be no growth. So there has to be an investment both ways. It has to be either vertical or parallel. There has to be, it can't be just one direction. So I think to get to my point is go and serve somebody. Ryan's 26 years old, and if you're whether you 19 or whether you 30 or 40, teach me about crypto. He might just give you some advice. Read this book. But there's some stuff that you probably can't get from the book that you can get from Ryan. Maybe go cut his grass, right? So maybe go get some of that leverage up. So in 6 months from now or a year from now, you can use his wisdom, and you might move to another country and use what Ryan taught you by cutting his grass. Now, I've done that. I went to a mentor of mine and cut his grass for free. And even if he didn't want me to, I would have still did it. And just to show him that, hey, I don't have money right now to pay you to teach me how to do this one skill, but for me to learn about real estate and taxes. And I think that's something we look at people and we think maybe they owe us, or we think they don't know us. I think that's a problem. If we don't have any value to give them, then they don't know us. But if they do, then there's a transaction. There's usually a transaction after this. So Ryan might come to me for certain advice. I'll go to Ryan for certain advice. Anything crypto, I'm going to go to him because he's going to understand that better. And he's a centennial, and he's going to understand that better. I guarantee you that any 35 or 40-year-old or 70-year-old or 100-year-old, he's going to understand it in a way that I probably can't, because he was born into it. But I was born into tech. I understand technology and media so good. Most of the people between, I would say, 30 years old and 45 are the best. These guys are millionaires just as YouTubers, billionaires as YouTubers, and the technology companies. So the younger people, they're taking that and they're only becoming the 1% or those that are in poverty. They're so discouraged that there's no opportunity for them to buy a house. There's a 19-year-old and a 25-year-old who just got married and they can't afford a house. So they're going to be on the top, on the low 5%. And then there's a 15-year-old who started a YouTube channel that's with 5 million in 1 year. So this is going to be the worst and best generation of all time, the centennials. And so I think we need to learn from them as much as possible, because they're going to know a world without finances that is cash liquidity. Let me say that. What we call cash, or what we call gold. So pay attention to what the Ryans of the future are saying, because it's the moment of now. Because the way they run things is the same way the 70, 80-year-old billionaires are. Donald Trump and all the other billionaires have two things. They have real estate and they have crypto. And Ryan is talking about real estate and talking about crypto. This is not financial advice. The world is changing, and about 5 years from now, the education system is not going to know how to handle real estate billionaires. The richest people right now, even Elon, I guarantee you, it might not be public, but he probably owns two things. He owns crypto. So if he owns crypto, he owns real estate. SpaceX is real estate. Commercial real, some type billions of real estate. He owns billions of dollars of real estate. So we don't realize that McDonald's is a real estate company. So those are the two things that's actually going to change the world. Is the real estate, the older generation, the younger generation, the crypto, and then we're the social media generation. The millennials are the social media generation. And so if you behave between the age of 30 and 45, those are the people that's really running the media right now. And so if we don't use wisdom, how to use our economy and build this economy for the benefit of the kingdom, we're really going to fail. And there's going to be a lot of people who do succeed, and we're going to watch. And there's going to be a middle class that's totally wiped out. One last thing, Ryan, because I got an email this week. And for years, everybody's like, technology is going to come down. It's going to crash. Cameras are going to get more cheaper. Everything's going to... Right now, they're doing a lot of sales right now. And I was like, oh, man, maybe stuff is changing. Actually, I think Apple is going down. They're losing a lot of money in sales. But besides Apple, all the other companies, I got emails. Expect all our technology to go up. Expect camera gear and audio equipment to go up next month. So they said this month, right now it's a sale. We just want to tell you anywhere from 10 to 30%, your products are going to go up 10 to 30% in the next month. So I got it from a famous company. I'm not going to say the company's name, but I just got this email from a famous company, and they said expect all the stuff in our store, and they sell $100,000 equipment, $500,000 equipment for recording studios, movie studios, and they said expect everything to go up. And so we need to watch that. What Ryan was saying about inflation, that's true. Well, people can't afford a camera. It's going to come down, of course. I don't know about that. I really don't know about that. I want to take what Ryan is saying into consideration, and maybe inflation might be a real thing, and it might not be 2008 again. 2008 is going to happen again, expect it to happen again, without the same results. So that's very, very confusing. That's very, very confusing. 2008 is about to happen without it. So we need to kind of take we need to kind of take a memo from The Big Short. This is going to happen again, but it's going to look different. Maybe there's going to be an inflation versus just a decrease. Maybe commercial real estate might drop to an all-time low, but a residential might go up. We don't fully have the answers, but having this conversation today with Ryan and other entrepreneurs is going to change us and change our mentality for the future. And we're going to really get this, or we're going to pay a price stuck in the same old routine and lose out on the opportunity, and our families are going to suffer tremendously for it. That's my last word, Ryan.
Man, good stuff. Great way to close out there, man. That was spot on. I actually agree entirely with everything you said. Hit a home run there for sure. We could talk about those topics for a very long time, but so I want to give one last opportunity. Anybody in the audience, if you have any questions you'd like to ask, you're welcome to pop up on the stage. We'll take a quick moment to answer those, but otherwise we're going to go ahead and close out. So just a friendly reminder to piggyback off of what Naphtali said. Spending data shows that currently over half of the money being spent right now in the country is coming from the top 10%. What that means is that, as Naphtali said, the middle class is literally getting wiped out, and I think it's turning into two different classes. It's either going to be the wealthy, the top 10, maybe 15% are going to have most, or if not all, the money. They're going to spend most of the money, and then the bottom, 80 to 90%. They're going to be the new low class, which is basically they live paycheck to paycheck. Every single year they get poorer because the money supply increases. The places they work for are not giving them significant raises. It's actually lower than what inflation is. If you get a 3% raise at work, you're making less than you did the year before. Real inflation is about 7% year over year. So it's important to study and understand this, because otherwise you're just running around on a hamster wheel and you're not making any progress. So, in my opinion, investing is the only way to get ahead. It's not by working harder. It's not by working multiple jobs. Well, at least not long term. If you have to do it short term to get something started, that's great. But unless you want to live a life working 60 to 70 hours, which is the direction we're heading, to be able to afford to live. That's kind of what it's going to turn into. Yeah, it's a shame we don't have more time. I mean, we could talk for a while. The debt delinquency rates, the amount of people defaulting on loans is mind-boggling right now. It's worse than 2008. So something else to keep an eye out for. I'm not going to spend much time or any more time talking, but you should look at how many students are not paying their student loans. I think it's like 9 million. I think auto delinquency default rates are up. They're up, I want to say, like above 15% or something on the higher risk borrowers. So there's a credit bubble that's popping. They got to the point where they're just not paying their debt. And so it's going to have crazy impacts in the economy. And so we also have tariffs coming into play next week. So just a lot going on. It's really crazy times, but yeah, nonetheless, I'm going to go ahead and close out the show. Thank you, everybody, for joining, for listening. And Naf, always a pleasure to have you. Hopefully, see everybody next week. Take care. Go spend some time in prayer and go make some money this week. Cheers.